Did the stock market just bottom out? Is now the time to jump in? These are the million-dollar questions we will answer tonight. Plus, we'll show you some tools so that you can spot market bottoms like a professional. And to top it off, Janine and Pedro will give you one major prediction for 2025. As always, we'll bring you our best stocks right now and answer your questions. Welcome to Wealth Within's Australian stock market show. With 20 years of experience training over 30,000 traders, we bring you what actually works in the stock market. I'm Philip Tortevsky, and joining me are Wealth Within's professional traders, Janine Cox and Pedro Banales. Good evening, team.
Good evening. How are you?
I'm great. How are you?
Fantastic. It's good just to be an observer of the market at the moment, isn't it? And just watch what's going on. There's a lot of people who are excited about it. Then there are people who are fearful. But I think you've just got to sit back and just look at the opportunities right now. Oh,
absolutely. And we are going to be covering that exact point. So let's dive straight in. Buys have emerged over the last week on our market. So have we officially hit the market bottom? Now, Pedro, I'm going to go to you on this one because we have seen some buying, which is different from the last 4 weeks.
Yep.
And I guess the question on everyone's lips, the million-dollar question.
Yep.
Are we now at the bottom?
Have we bottomed? Yeah, well, what I found interesting is that last week, actually, all sectors were up. And that's something that you don't see generally, which means that buyers have returned and they're picking out all these stocks that have, been sold off. So the question is, are they picking bottoms or are they actually, spotting and getting in at the opportune time?
Yeah.
And of course, that's what we're going to answer tonight.
Yes, we are. We're going to show some amazing tools. We're actually going to give 2 exact tools on how the market or what to look for to identify these reversals like a professional. So, but before we do that, to get your thoughts quickly on the bottom, are you in the same thinking of Pedro or?
Yeah, look, I think that could very well be the bottom right now, and that's what everybody's hoping is happening right now. But you've always got to be prepared for the alternative to happen. So don't just go gung-ho into the market right now thinking that you're going to get something cheap. Just do it in a measured way and use your rules is really the thing. So while the market looks like it's turning, just get good rules on stocks, wait for the confirmation.
Yeah, and to that point, are you looking sector broad or is it just focusing purely on the index, looking for that reversal? Because as we know, obviously last week all sectors were up, but that might not always be the case moving forward.
I think it's really important to have a key set of stocks on your watch list that you're watching if you want to be really disciplined about it. Otherwise, there can just be so many targets to try to hit, and then you're not going to have a really good approach to what you're doing. So as we're going to look at on the market shortly, you'll see that there are different signs on the market that can tell you when those turns are in. So pick the stocks that look like they're turning. You can do a bit of a search of your workbook if you like and just pinpoint those ones that look like they could be closer.
Yeah, great advice. All right, so how about we do that? Let's get into the All Ords Index right now to have a look whether we are at that bottom.
Perfect.
Okay. You can see on the screen right there, we've actually seen the market come back. Now, 1.5 months so far, that doesn't mean that we're going to go into a major correction at this point because right now we're seeing some signs of support happening. You can see that as evidenced by the right-hand side of the chart. The first thing to look for is a reversal. Now, this is something that people tend to get stuck on, these bar reversals. People always talk about candlestick reversals, and they make that as part of the strategy for their whole trading approach, and they're forgetting the big picture in the process. So that's where looking at that monthly chart, to me, it's as simple as just checking to see whether there's support first on the big picture time frame. So that's one tool. The second point about the support is the fact that when you're looking at support, it's not just us drawing a line in the sand and saying, okay, there's the strongest level on this stock. We have to look at the whole picture of the stock and decide how strong some of these levels are as to whether this level is going to hold or not. And that requires a whole lot more skill than just using it, doing it by eye, as you know.
Yeah.
So that's one of the things, if you don't know how to do that, it's really important that you get those skills and get them before the market really starts to take off in the next couple of years. But right now you can see there were 3 tops here. The market hasn't come back right on that level, but sometimes you'll see it come back and go through it. So there's a slight possibility that the market might turn around and come back through that line as part of testing. But we need to see a couple of weeks up at least on the market to do that. One other thing that I look at is big picture long-term support from the angle of the trend coming up. So we know that we can use a trend line coming up, or as you've heard the guys talk about, the momentum lines coming up from lows. And I've just picked this low, the COVID low. We know that looking at a momentum line, we can see there that it's pretty much in line with the angle of the trend. But the pullback may just be a point in the trend that it's coming back to give us a nice confirmed uptrend line to support the rise going forward. A lot of people don't look at it like that. They're looking at moving averages, which is the wrong thing. It's not. It might flip above the moving average and then flip back down again. And then what are you going to do? You know, you're sort of in the middle of nowhere sometimes with these moving averages. But the trend line is giving you a clear line and a point. So important to know how to draw those properly, and there are a number of rules that you must know. So, you know, that's something that I would stress that going forward people have a really good understanding about, especially given, if I think back to the GFC, there were people that came into our office saying, thank you so much for teaching us how to use those trend lines, because it saved them a lot of money, especially for people who are looking more medium to longer term. They can be really important, but also for shorter term traders to know whether they've got to switch from going long to short.
Yeah, I find reversals, they're one of the trickiest things in the market. It's something that is learnt. I mean, having a natural ability to identify reversals doesn't exist in the market. So look, as Janine said, obviously something to consider. But before we move on to the S&P 500, there was one other thing that I saw on that chart, and I want to ask your importance of it in terms of looking at these reversals, and that's volume.
Yep.
Now, volume last week was much more than normal.
Yep.
And the last time we saw this kind of volume was back during the major low around COVID time.
Yeah.
So is that a trigger for you? Is that a marker that you look at moving forward? Hey, what's volume doing? And does that confirm whether or not we could potentially be at the bottom right now?
Well, it's definitely one of the factors, and you know, it adds more confluence to the opinion that the market has bottomed. And you know, think of it like the fuel in the car. It shows how many participants are coming back into the market. And
mine's electric.
Is it, well, how much wattage is going into your Tesla?
I'm joking.
You sure it's not nuclear?
Well, maybe one day, I don't know.
Hydro. So let's have a look at the chart and actually see what Phil is talking about here. We'll go to the weekly chart, and you can see that this increase in volume coming in. And what's important here is that the volume is actually coming into this reversal bar here on the weekly, not this down bar here. So it looks like it was just steady volume as this down move happened, and now we've got volume coming back in. And you know that what you outlined before is it's actually a great point, because that peak there we can't see that until COVID.
Hello.
So there's no
That's a great point.
Yeah, there's no spike in volume of that manner since back then. So it looks like the participants are there, the fuel is there, it's ready. This could very well be the start of that new uptrend, and look how much upside the market has. If you manage to pick the right stocks anyway, you've got huge upside potential.
Yeah.
What I'm going to be talking about later on the show is my prediction for where things are going forward. Can we get to that?
Well, we're going to get to that soon, and Pedro's going to give his prediction as well. Don't give it too soon, but yeah, that is something to look forward to. The team are going to give their best prediction of 2025, so stay tuned. But before we do that, let's quickly get into the S&P 500, because obviously the US market, they say when the US market sneezes, the rest of the world catches a cold.
Especially
and
Australia.
if we are going to see a reversal here, more than likely the US should be turning as well.
Yeah.
So is that happening on the S&P?
Well, it actually is, and in a stronger manner as well. We'll go straight into the chart so then we can visualize what's going on. And you can see on the weekly chart already they've had their reversal, and they've even got a jump in price. So volume, albeit not so much more than before, but it's still increased from these prior periods back here. This weekly bar, it's really it's a bullish sentiment really. Now the only worry here is that if it'll come back and refill that kind of that gap that we've got there, which is possible, but that's not too far down in terms of percentage. It's only a couple of percent, and we know that the market can move a couple of percent each week. So the American market is actually looking quite nice. Now, they are heavily weighted towards technology, and we are seeing technology come out of favor, unfortunately. They're going through a few things. And I won't give out my prediction either because it is tied just yet because it's tied to this. So we really need the other sectors to really come in and bolster this market up because technology is, struggling a little bit in America.
Yeah, all right. Well, speaking to that point, you talking about sectors right now, because that is, I guess, the next part of this, looking to where the market is moving and focusing on what is actually driving the buying right now. So, knowing that allows you to really zoom in, Janine, and get to the nitty-gritty of what's moving. And so how about we do that? Right now, if I pose the question, what is driving buying on the ASX right now?
Well, look, I think it's a perception about the market turning around and they're loading up into a broad range of sectors, so particularly ones that have been sold off over time, but favourites will always be financial stocks if people think they can get those cheaper. Yep. So it's sort of a bit of a broad brush at the moment. That's what I think. You think that? All right. Now, Pedro, I know you've honed in on two specific sectors.
Yes.
Because just measuring over the last week the volatility, there are two that stand out, right?
There are. So we had a look at the different sectors last week. And, like I said, most of them were up. All of them were actually up. But how strong they were up, and that's how we filtered these out. So we came across the staples and the utilities being two of the strongest sectors last week. So we'll go straight into the staples chart and have a look at what we're seeing here. So on the weekly chart, we can see that last week, 21st of March, this bar was up in a range of 4%. So that's, for a sector, that's pretty strong.
That's interesting, being a defensive type play, and that's kind of leading the charge. You would have thought maybe it would have been a bit more risky type sectors, but
it highlights the sentiment around these uncertain times around tariffs and things. It's the flight to safety is really evident because utilities and staples. Can you pick any more boring sectors, right?
Woolies has been sold off so heavily, so that's got to weigh in on that. So there's probably a bit of a recovery there.
Exactly, and we're going to have.
I'm not so bullish on it right now, just because I think it's a bit too early for this one. And sometimes you're going to get a bit of a flood into stocks and sectors that have taken off, and then you really need to wait and see whether that's sustained buying or not from those ones. Because it's so different to looking at our All Ords chart, for example, isn't it?
It is. I totally agree. And this sector was actually bolstered by Woolies and Coles, really. They were the ones driving this sector.
And that's a point we're going to get into soon. One of our topics for the Tonight Show will be on the Coles and
Collies.
Interesting.
There you go.
But something to look
You've
forward
made an index.
Yeah, a new index. But to that point, there is flow coming through there right now. So, it is something to consider. And the other sector you said was utilities, right? So
utilities, yep. So we can get onto the chart of the utilities now and have a look. So the utilities has actually been rising since 2021, which is quite interesting to me. We've broken above the all-time high. This is on the monthly chart there. So we have broken above it. If I just put a horizontal line, we're still underneath it, even though we have broken above it, but there's a lot of price action happening around here. And I think with everything that's going on, in the utilities, energy and so on, that really highlights the fact that this sector, I think, has legs to even grow even further.
Yeah, fantastic. All right, now, the good stuff, right? Let's get to the stocks, because obviously it means nothing unless we can find opportunities on the market. So let's go and have a look at a few stocks in these two sectors that you're liking right now.
Yeah, sure. So actually, I'll touch on this one, APA Group, because this was one that I've actually done for the students. We did a whole deep analysis on it for Trading Essentials, and we highlighted some very interesting things. And this reversal that it's done, it's funnily enough, we had some levels around here. So the stock has been falling for quite some time. Actually, I'll go to the monthly chart first because we want to see the bigger picture. And this pattern is quite interesting. The fact that it's risen all the way up, accumulated, rose up again, kind of distributed, came back down, failed to reach that all-time high again, and then fell back down to that $6 level. But look how strongly it is up now, and the volume is increasing as well. We can see higher volume around this earlier part, and then we've got higher volume now on this up move. So this one, actually, the bottom could be in very well, and you might look for a little bit further confirmation, but it's definitely the time to start applying your analysis and having a look at it in a serious manner.
Fantastic. Janine, did you want to add anything on that?
Look, I mean, obviously it sort of found support down here at this low here, 15th of November, and then down in February 2025, and a push off that low. But sometimes stocks get a bit carried away off these lows and then they retest them. And it really depends on that drawdown. I mean, you have to go back in history. We can look back here and see a huge acceleration off that 2021 low. It didn't even stop until it got past all of these peaks here. Will we see the same thing again in it getting through these highs up here? That's the question mark right now. Or is it going to come back and do a test? And it's really a judgment of your analysis and your back testing. You've got to just look at history, make a judgment, and is it, how far is it from that low? What's my risk position? And if it comes back, am I going to be able to hold on to it? So there's 17% to that low there. The chances of it coming back to that low probably after a big push up like this obviously is much lower right now, but it's just a question of where do you set your stop loss so that you could stay into it if it did come back.
I'd actually like it to have a bit of a pullback, retest that and actually not travel all the way down, maybe around that $7 and then keep going. So,
all right, great points. Next one.
All right, next up we have AGL. So, basically the utility sectors are AGL, Origin and APA. Those are the three main ones. All the other ones are all just pretty much speckies. So not really your playing ground, Janine. But, quite interesting at that. AGL, I think that it's still bullish. We are going through a bit of a sideways consolidation. We have been since 2023. We haven't really changed much in price, but it hasn't kept on falling, which is a good sign. Look how much fall we've had since that high in 2017. Any rally was met with resistance and got sold off. Any rally along these periods was swiftly sold off. We're not seeing that anymore. The personality has changed. Any rally is met with a bit of resistance, but a higher trough, and then a small rally, higher trough, rally, higher trough, rally, higher trough. So
buyers are holding.
Buyers are holding, and I think that this is a great medium to long-term play here, especially with innovation.
It's a great trading stock, but I think a stock like this can really test the psychology of traders. So, because it's so volatile at times and it doesn't always use the same sort of set of rules when it bounces for you to get in. You've got to be a bit more adaptable at times with this stock.
Right.
And even going forward more, it looks like that now with that resistance there. So, and it reminds me of a conversation that I had last year with one of the traders that we were mentoring last year. And people think that they're actually way ahead in terms of their confidence in the market. And often guys, do I have to say any more, are feeling that way when they're in the marketplace, but especially if they've had a few wins. But it's not until you're dealing with a stock that's very changeable and they start to learn, I can use sort of rules to do this and I need to be setting stop losses, but then you get a few wins and it's a plus. But the biggest common denominator between the traders that I worked with was that confidence thing that comes through from having a proper plan, proper set of rules to use, understanding how the stocks move and what can happen if a stock does this, what's likely to happen next. You can't get that, unless somebody downloads it to your brain like you're in the Matrix, and wouldn't that be awesome if we had that? But I look at the courses, that we teach as being that.
Yeah.
Because when I started, I had this much material to learn from. You guys have got this much, maybe even this much now to learn from with all the content that we provide. So it's all there for you to explain all of that stuff. You don't have to go looking for it, like we did. So
work breeds confidence.
And the AGL is one of those stocks that you can eke out a lot of return if it's in your watch list and it's one of those stocks, because you've got these rises here, but you've just got to work out how can I get the best out of it? And that's where the confidence comes in of knowing how to do it.
Yeah, great points. And I mean, just quickly looking at that, do you think now's the time that you should be getting excited with AGL or not just yet?
I think you should be getting excited, but not buying just yet. So that's a really good way of putting it, Phil. Just looking at the monthly chart here, I would stick to that. Even if you're trading shorter term, and be looking for when is the safest lower risk opportunity to be looking at AGL. And look, if it comes back further, it might be lower down. But right now, that $12 level is really important for
It is.
AGL.
Oh, yeah. Very strong
Fantastic.
resistance.
Now I know you got more.
All right, one more. So I mentioned the speckies. I've put this one in for you, Janine. Frontier Energy. Now,
She still hasn't punched you yet,
yes,
so that's
that's good. Well, actually, it might be a
Sitting too far away.
might be love-hate because actually you would actually like this one because this is in the renewable space. Okay, so Frontier Energy are putting in solar panels, farming and all of that. So we'll go straight into the chart anyway to see what's going on. It hasn't been in favour, unfortunately, but what I do like is that it has become more liquid since 2017. And then if we go to the weekly chart here, we are seeing a little bit more volume coming into it. We've had a bit of a spike in price, 13 cents, if you could call that, price. So it's probably not one for everyone. But I think it's one that in future could actually fare quite well with the renewables.
From your experience when you're looking at charts like this, and I'll get your opinion on this as well, what type of trader or investor should be looking at a stock like this? Because as you just mentioned, this is not for everyone.
Yeah.
So who is it for, and why would it be for a certain type of trader?
Right, yeah, so it's not for the buy and hold type trader. It's not for the long term, just, I'm going to put money into this because I like what they stand for, which, it's great that they are in that space, but you wouldn't be just putting money in there and expecting this to be a multi-million-dollar company overnight. So I think it's more for the traders, the people that know how to get out at certain levels, the people that know how to get in at the most opportune time, and that takes practice and it takes experience. So to summarize everything, it's for people with experience in trading, really.
Yeah, knowledge, education, all that stuff. All right.
I'd just like to add one thing to that.
Please.
And that is that this particular type of stock, even though I don't trade these types of shares, and that's fine, but it needs to be someone who's prepared and has the discipline. I think that's really the key to add to your points. The discipline to sit back and wait for those opportune times, not just thinking, okay, that looks like there could be a bottom in right now, but looking for the setups that have happened before. So if we go back to the chart just briefly to have a look, remember we've told you before in certain shows there's often be this consolidation that happens as there's an accumulation going on of the share. The sellers actually come in, but they're not able to sell the stock off. But once you actually see that reversal, and this is where some of those shorter term techniques might be better used than waiting for that much broader confirmation. So we might generally look when we're trading bigger stocks for the stock to trade above this high, but with these smaller stocks, you might be able to get in on the reversal and wait until it starts looking like it's going above that point. What did it do here? Look at this one, another nice little setup. It may just be that you're trading this thing once a year. Three or 4 weeks a year, that's all you're doing, and you're making your money and you're walking away.
Yeah.
Huge upside.
Great points. All right. Now, that was an energy player. We were talking utilities, and so you've snuck one in, hasn't he?
That was a utilities,
Oh,
but
utilities, okay.
yes, under the utilities, but a bit of
related.
energy in there as well. It's kind of a hybrid.
If anyone was going to find it.
Exactly.
All right. So we've got 3 more stocks.
We do, and now these are from the staples. Now, the staples are dominated by Woolies and Coles, and we're going to cover those later. So these are just the next one's down in terms of market cap.
Yep.
So we'll start off with A2 Milk, and this one looks like it's trying to get back on track. It was a market darling, all up from 2016 all the way up to 2020 after it got sold off quite heavily. The biggest customer is obviously China. That's going to have a lot to do with their story. But in terms of technicals, I do like the fact that it's crossed above these highs here. So around that $7, $7.10, it is strongly above it. I think that there could be a retest of that level, but if it manages to hold, I mean, the upside is huge. Thinking about what it's done before anyway.
Well, I agree with you. That is, out of all the points, technically, that's 770. It's been so long since it's broken it. And you're looking at me right now like you want to say something completely opposite. But
I'm saying, yep, hurry up.
That break of 770, it confirms a few things in terms of buyers willing to accept high prices.
But
Janine, please.
Oh, now I'm cracking up. Looking at that chart again, we have to go back to that because I'm blushing. You can see that there's a gap there. So the
Yes.
but, and that's a
Elephant
big
in
but
the
for
room.
me.
Why, can you
had
explain
a visual
that?
on that one, but
Why
there's
is
a big
that?
gap.
Yeah, why is that a concern?
Because often stocks fill gaps, and just looking at A2 milk, it's one of those ones that does fill gaps. So having another look, you can see there was a gap back here in 2021. They don't always get filled, but geez, another one was filled here. This little one here, it tried to come back and fill it, didn't come all the way. It's tried to come back again, right? So, and then eventually fell into it. So what is it going to do here? And that's a big question mark for me. So this is really, for me, this is someone who is a really good risk manager trading this one.
So let's project forward and play hypotheticals. If the gap does get filled and then it goes on for another leg breaking above 770 again, does it get more exciting then?
It does, but I was thinking, what if the gap doesn't fill and it goes up?
Yeah,
Well, that could happen.
You've always
possibly.
got to look at both sides.
Yeah.
And so, if it doesn't fill, what do you do? So, like you're suggesting, it could come back a little bit further.
I think at least the retest of that $7.
Maybe another couple of weeks, potentially.
Yeah, definitely. And, I think that if it does fill this gap, it's going to invalidate this move in the first place. So the fact that buyers were willing, and I think that this came out during reporting season, we can see this bar here is in February. Yep, so good reporting.
Yep.
If it does come down, it means that the buyers were wrong in this case. So
If there was a takeover or something like that, I'd say, okay, I get it. But the only other thing that we can, one of the other things that we can draw on is, well, it may come back into the gap because it may come back eventually to that angle of that line. It may be creating a new angle. I don't know. But right now we've got to assume that because there's that support there and there's that grey line there, that there's a potential for it to come back here. But coming back to that point, Phil, earlier that I mentioned, what if it doesn't?
Yeah.
So if it just comes back temporarily and then turns around again, then it's about deciding, well, where am I prepared to get into it if it does take off?
Yes.
And that's really the next important question, isn't it?
Yeah, absolutely. Great points. It's not there yet. That's the thing.
Exactly.
That's the thing, yeah.
Next stock.
All right, next one, we've got Metcash. So that's... this one is trending down. Now this one was next in terms of market cap, but even though it has been trending down for a while, we are seeing a little bit of an interesting pattern here, a bit of a basing pattern. But we don't know yet, really, until we see a breakout in either direction. So I would just draw a nice little triangle around there. Triangle, square. I should go back to school. Dyslexic there, but... either we see a break above that $3.26 or a break below that $3. That's going to give us the direction for the foreseeable future. And if it does break below that low there, then we could be heading down to, around these levels here, say around that $2.50. And that's about a 15% drop, even further.
What's the probability? That's what we've got to focus on, isn't it? So, like looking at that, it's at a strong level. The risk is there, but we obviously won't know until it takes out this low here.
That's right.
But what you're saying is that at the moment I'm looking at that and thinking that there's a higher probability for it to rise if it can get back above this prior peak there.
Yeah, well, we have to assume because it has been falling that the high probability is to the downside, but there is definitely probability to the upside as well.
Now, are you both factoring the fact that this one, when you look big picture, it's coming off already a significant pullback, and we're not talking about a stock that's been around for 2 weeks. We're talking about a stock that's been around for a long time.
Oh yeah.
So generally, it can.
Good point.
Generally, in time, these big stocks, when they do have these healthy pullbacks, 50, 60, 70%.
Yeah.
They create opportunity.
For sure. Yeah, eventually this is going to be a great opportunity. Nice big stock in the staples. It's something that we need. It's really embedded into, the Australian economy as a whole. So bigger picture, like you mentioned, it's looking great. We have these huge rises and then a bit of a pullback. And let's see what that pullback was that we had back here. So we've got around that 40% pullback. And then now what type of pullback do we have? We've got around that 40%. Look at that. So this could be the make or break moment for this. And if we just apply a momentum line here, well, it has broken below. It's not a confirmed momentum line, but we still have that those levels there that could provide some support.
Now, just quickly speaking of momentum lines, they are the exact techniques that are in this book. So if you want to do what the guys do, as we say here every week, go and check this book out. It is called Accelerate Your Wealth, Dale's book. I think all you have to do is pay the shipping or jump on our website, wealthwithin.com.au. Had to throw that in there.
Yeah, perfect.
We've got more stocks.
Great starting point.
Yep.
All right, so BGA, Bigger Cheese. This one is quite nice, actually. I do like that confirmed uptrend that it's in. And, I'll just outline that trend there. It has broken below it a little bit there on the monthly, but it's holding up. That's a positive sign. We do have a little bit of resistance up ahead around that.
I just like that trend. It's a beautiful trend,
isn't it? Yeah, for sure. It's it looks like it's going to hold up.
If we compare it to that one, it's just that was a bit rugged. Also, this one here on the recovery after the low that happened in 2016, it's not like that either.
Yep.
It's more like this sort of a tear, but then it hasn't had that big euphoric rise yet. Probably because of all this resistance that hits here.
It's sustained, isn't it?
It is.
Is that big outside bar there, or the big reversal that's happened near the high, concerning at all, or?
Look, it could just be a short-term move, and we won't know for a few weeks whether that's the case or not. So I just keep watching it. But I think it's marked a clear line in the sand, just that reversal falling short of that high there. The real thing is to just see whether there's enough upside, because what's the point in watching it if there's not enough upside to the high, which there's plenty there. There's 20% in it.
And from the current close to that next resistance level, how much do we have? So
again,
for a short-term trade, pretty nice.
Yep.
Well, that's the point, obviously. If there's an opportunity there, then, hey, that's what really matters at the end of the day. Now, great stuff, but I'm not going to let you off lightly, because it is time right now for the guys, or Pedro, to give his major prediction for 2025. So we'll get to yours, Janine, later in the show. It'll be very amazing, as always, but...
Yep.
Mate, what's the major prediction for 2025?
Well, look, I haven't got my crystal ball here, so I'm just going to have to use brain power on this one. Now, I think that, unfortunately, US is going to go into recession because of what's going on with the tariff situation. There's a lot of uncertainty around business over there, business investment, and the reciprocal tariffs that have been put on the US as well. So businesses don't know whether they should be divesting, should they be building facilities overseas, should they be coming back to America to build facilities, how much is it going to cost them, how much do they have to pay their employees, so there's a lot of things that are uncertain, and of course President Trump is a little bit spontaneous and can come out with certain things overnight, and business doesn't like uncertainty. So I do predict that we're going to have 2 consecutive quarters of negative GDP growth, which would lead to that recession.
So just to add to that point, so if the US does go into a recession, what do you see moving forward from a trading perspective or an opportunity perspective? Because, okay, I'm thinking off the top of my head, if they go into recession, potentially rate cuts.
Yeah.
And then potentially that's going to flow through to some areas of the stock market more so than others.
Yep.
Is there any that you're thinking there that are going to win big?
Yeah, definitely. So I think that, you've got moments of expansion and then, contraction. And of course, the best opportunities are, once that contraction is over. And that's where you get all the stimulus and all the rate cuts and so on. And a lot of businesses are going to benefit from that. In America, it's a different story. Maybe you're going to see more investment into the techs.
Gold, maybe?
Yeah, well, maybe. If it's uncertain, and we are living in uncertain times, gold, we're seeing breaking new all-time highs. But I think, once you do have that high liquidity scenario, then you're going to see a lot more investment going back into the market. So you might see a little bit of a pullback. And I don't think that Trump is very worried about the market. It's not like his last term where he was constantly, worried whether the market was going to crash.
Yeah.
He's got an objective, and, whatever happens to the market, happens.
All right. Fantastic stuff. All right, there you have it, Pedro's prediction for 25. Now, if you want the skills to analyse stocks, just like you have seen tonight, give the office a ring on 03 9290 9999 or visit our website, wealthwithin.com.au. Now moving on, let's get into our hot stock tip for the week, which is, Pedro?
Monadelphous Group. So that's an interesting name there. It's an engineering company, much like Woolies. Basically, they provide engineering services for the energy sector. Actually, we'll go to market index and you can have a look for yourself. So this is Monadelphous there. It's up 1.3% today. It's a huge market cap, 1.5 billion. So it's not a smaller type stock. 4.23% dividend yield. P ratio is around that 20, which is nice. And that, what I was saying before, it's an Australian engineering group that provides construction, maintenance, industrial services to the resource, energy and infrastructure sectors. And I think that these sectors, the key being energy and resources, we're going to see a lot of investment going into there. There's a lot of, we're going to be more energy hungry moving forward. And these guys are the ones providing the that infrastructure and services. So let's have a look at the chart and see what's going on. So we've got the monthly on the left, weekly on the right. I'll expand out the monthly chart. And this is a company that has been around for a long time. We've got data back here since 2000, 2001. It's gone through some ebbs and flows. You wouldn't want to be holding it for a long time. But at the moment, long story short, it does look like it's trending up again.
This picture here is a perfect example of the buy and hold approach versus what we do here at Wealth Within, which is, getting in and out of the market, identifying the trends, riding the moves. That is a picture perfect example of how you can supersize or outperform that buy and hold strategy. And we've seen it time and time again on this show. So this is a stock, definitely a trader stock, right?
Oh, for sure. Yeah, you wouldn't want to be holding this, all that time. And it goes back to what I was saying about that, that expansion phase there, then followed by that contraction. And then what's the next logical step? Well, that's expansion again. So, that's just a rough picture of what I'm seeing in this stock, that I think that it's now in that expansionary phase, albeit, it's not going to blow the lights out in one go, but I think it's going to be a nice, plotter. Next resistance is at 17. Next support is at 14. So we'll go to the weekly chart to really ascertain what we've got here in terms of a trading opportunity. So I like that it's crossed above that down momentum line and it's actually formed a beautiful up momentum line. We do have that next resistance at around $17, which is 11% upside. Next support is to that $14, which is 9% downside. So we're kind of in between those two levels. But I do like the fact that it's holding up and pointing up. All the closers want to be on the upside.
All right, now give us some probabilities. Obviously, I love the fact that you've done the risk-reward scenario. Right now, potentially short-term trading opportunity.
Yep.
But for more the medium-term investor, long-term investor, do you see more, a play there too?
Yeah, definitely. I mean, you could have a nice little counter movement here. You could use that. And I think that the longer term probabilities or the target is up around that $20. So we've got that 30% until we meet that next very strong resistance level. And if it does break above there, then to the all-time high, we've got a very thin bar there, which is great. So there's not many resistance levels to that. We've got a further 42% upside.
Wow.
So great long-term prospects, and you've got that dividend yield to kind of keep you there along the way.
Yeah, so it could be a play for both,
nice
as you said, for the even the income type play combined with the growth, which is fantastic. But that is it for our weekly hot stock tip. We're going to get shortly into Janine's prediction for 2025, so stay tuned for that. But it is time to now talk all things market trending this week. Janine, this is your segment. What do you have?
All things trending.
Yes, something trending, one thing.
Something trending, one thing.
That'll do.
Anything.
Anything?
Coles and Woolies.
Yeah, let's
Big
go.
one.
Sure.
Should we talk about that? Is that the danger zone here?
Yeah, well, let's do it. I mean, big news coming out of that. Obviously, the ACCC came out and they've had investigations on Coles and Woolies. They've managed to come out of that as superheroes, and they've been labelled as the most expensive or one of the most
profitable
supermarkets in the world. Now, when I hear that, I'm immediately thinking, I've got to go and have a look at the share price. But before we do...
That's funny that you say that, because a lot of people are thinking that means I'm paying too much. They're not thinking about the stock market, that they could be making money out of it. They're not thinking about the fact that their superannuation is making money out of these stocks too.
Yeah, that's a good point. I guess that's why we're sitting here. But
for sure.
So do you want to look at it?
Well, before we get into the stock, I mean, your thoughts on this situation. Now, when you see a company that beats or has that overhanging cloud of negative sentiment around it, maybe a lawsuit or whatever, they come out the other end of that. From your experience, does that mean now it's the time to get really involved in looking at the company or even picking it up?
Look, I think so, because, you know, if there's a witch hunt?
Yeah.
A bit of a witch hunt, and there's always a way, people are always picking on banks or they're picking on businesses, and I'm actually really, even though it might mean that you're paying a bit more by shopping at Coles or Woolies, if you shop at IGA, whatever that is, you know, the bottom line is that we have some successful businesses in Australia that measure at the top of the world. And to me, that is something also to be proud of. There's a number of international stock companies that have tried to crack into our marketplace, but they're always trying to break up things. As soon as we do well, they're always trying to break it up, aren't they? You know, because it all comes back to what the ACCC say and the consumer every time, not ensuring that we have a great industry. There's companies that are employing, like, I don't know how many tens of thousands of people they're employing that have jobs and secure jobs. So there's that side of it as well. So it's a big picture thing, but of course people are looking in their and I understand that, they're looking at their weekly spend, which it is a big spend per year to look at that. They were talking about gas prices and, you know, how gas and energy is so cheap, and the media are really taking that one and running with it.
Yeah.
But what you spend at the supermarket obviously is a lot in a year in terms, but that's got to translate somehow to the stock prices moving up, doesn't it? You would think, although Woolies obviously was the one that was falling the most.
Yeah.
Coles has actually held up really well. And so often these two, and I've seen this over history where the two supermarkets swap in terms of opportunities, where the fund managers switch and they go from Coles to Woolies, right? And it's a dominant one until the market gets into full swing and all the stocks are running and they're all going together. But at times it's like sometimes you'll see the difference between Rio and BHP, although at the moment there's not that.
Yeah.
But I just think right now that there's a really good opportunity in Woolies, and it's one that should be watched.
Yeah, did you want to add something?
Yeah, I just wanted to say that every time that I see a new estate be put in anywhere in Australia, you always see a Woolies or a Coles. You know, they're the first ones in there to put their foothold. So that already, that shows expansion, and it shows, you know, that constant, they're basically staples in Australia, and they're going to continue to be that. So you've got that backdrop and that confidence that when you're investing in these companies, you know, they're going to be doing the hard work for you. All you got to do is put the money in.
Yeah.
But Woolies is not doing the hard work for us right now, but it may do, and it may produce a really nice short, even medium term or medium to longer term. And we're talking longer term, we're saying more than 18 months. But, you know, you've got to watch that at this point in the cycle to work out whether it's got the legs to be able to sustain it for longer than 12 months or 18 months. But let's just have a look at Woolies, shall we, and see where we're going with it. So at the moment, it's finding support here. We can see that monthly bar there. It's closing high on the bar. That's often a good sign of a reversal, but it's really early days yet. And the thing about these stocks is they can often be really nice to trade more medium term than necessarily short term. And looking down here, we can see the angle of the trend coming down. It is well down from that level. So when you see that sort of scenario, you've got two thoughts. One is you could wait for it to get above the angle of that momentum, or you could look for something shorter term, but keeping in mind that you need to see some momentum first on this time frame, because otherwise it could still be part of this longer term downtrend that we're seeing. So that's the risk management side of it. And this bar really has buggered it up for everybody. Can I excuse the French? But it really has, because it's created a situation where it makes it harder. Well, it could be actually, when I think about it, it could be a positive, because it makes it harder for you to get in if you're looking at these trends and you're trying to go at the safest possible time, because you still need to be above that line, I think.
Okay, so you're saying basically above 31 is the confirmation type move, but doesn't sometimes when you see charts like this, to me anyway, you know, there is a thing with price does get flushed out. And you find out after the wash, you know, if price was really that bearish, shouldn't it go on with it? But we haven't seen that with Woolies. It started, it's flushed out, and it's almost reversed, you know, to that same
Well, it's had a long-term downtrend, so it's already been bearish for quite some time now. And the flush out that you're talking about happened back here. It's with this sell-off that happened back in November 2024, and since then it's been trying to find itself, and it's come pretty quickly back up after having a recent sell-off of about 3.5 weeks.
Yeah, well, the difference in the other one in September, November is that it never really came back, whereas look how quick it's come back this time. That's
true.
something to keep in mind.
Good point.
But as you said, it's all about confirmation stocks in long-term downtrend.
Yep.
So can we have a quick look at Coles?
Yes, all right. So Coles is a different story, isn't it? This one has been, ever since it listed back here in 2018, it trended up and never actually came back to retest the IPO price, which was around that, $13. It has been consolidating sideways since 2020, and then recently broke above the all-time high. Now, what we usually see when you break above the all-time high is then a retest of the high or even a dip below, and that's what we're seeing here. But it is still respecting this long-term momentum there, which I really like. Going to the weekly chart, we can have a look at whether that reversal is really, something to worry about. And, that very large down bar would have been a concern if it wasn't for this reversal bar here, this blue outside bar that we're seeing. There's a little bit of indecision because I'm seeing a reversal and then a reversal to the upside, and then it does look like there's a bit of a reversal forming here. I think that we're going to see price consolidate sideways for a little bit until the market digests all of this information, but we've got some clear levels to help us out here. I think that it will continue to respect that trend line. If it doesn't, well, then to stay out of it. And if you're in it, well, you've got some decisions to make.
And if you're not in it, above $20, above 22,
if you're not in it, I would say, I like that. So we'll go back to the chart and have a look. I'd be happy if you're not in it. I'd be happy to enter above that $19.
Okay,
yeah,
fairly soon.
So fairly soon, it needs to respect this trend line though. So we're going to see around where I'm pointing here, what happens in that area to determine whether it's going up or not.
All right, fantastic stuff. Now, before we get into answering some great questions we have here on the show, it is time for Janine's major prediction for 2025. So, Janine, I don't have a drum roll for you, I'm sorry.
That's okay.
But I know you're going to say something profound. What's the big prediction?
All right. Now, I'm just going to take it easy on you. Don't worry. You can sit back and relax.
Can I? All right.
It's just about the market. It's all right.
Okay.
So, look, our market obviously is going through a bit of turmoil at the moment. With uncertainty creates opportunity. Always flip it and think differently to the way the market is trying to get you to think. So, at the moment, we could see a short-term rebound and a retest of the recent low. That's one theory, but the big picture prediction is that we're going to make a new all-time high this year. It's later in the year, but the market will turn up in the second half and it will take off again. Often fund managers are rejiggling portfolios in the first month in around July after our financial year, and then they go into their reporting season after that. But that's often when we see what's going to really happen and how it's going to shape up in that second half. But predictions are the only way is up.
All right. And if I took that correctly, second half of the year is where most of that good action should start to come out.
Yeah, because we've got the election right now. Yeah. Trump's still sort of tossing around what he's going to do, and that's all going to come out in the wash in the second half.
All right. Well, there you have it. Some big stuff there. Now, moving on, let's jump into more stocks and answer your questions. Nick writes, can you take a look at Sims Metal? I have seen a number of entries after it found its recent low. However, there is some overhead resistance. Therefore, would you wait to clear this, or is there enough upside with support of the trend line? Don't own the stock, but I am looking for a position. All right, Pedro.
Yep.
Some good points there, obviously.
Yep.
Is he on the track?
Well,
right track?
yeah. Well, he's seen multiple entries. So the question is, have you backtested the stock and whether you should have taken those entries? But I'm sure he's bringing the art into this by looking at overhead resistance.
Well, he did
great.
Yeah, he mentioned that. That's the big concern right now.
Exactly, and I'm glad that he's doing that because it's not only about trading mechanically. You do have to have a look at this. So we'll go straight onto the monthly chart here that I've got. And I can see what he's talking about with overhead resistance, and I'm thinking that he's talking around that level there, which is around that $17. I mean, you could move it up or down. It doesn't really matter. As we just know that around this area, there's going to be resistance, and there's not much upside really, and that's probably what he's talking about. You've got that 11% upside. And if you were to take an entry, where would you place your stop? You could place it below this previous trough. And you've got much more downside than you do upside. So
there was already an entry in it. That's really the point, isn't it?
Yeah, exactly. I think that he would have meant on the weekly chart that the entries, because I can see exactly what he's talking about. Now, this isn't a...
So you're saying he's missed the opportunity, basically, or...?
Well, I think that he's done the right thing by having a look at the overhead levels here. Because there is some clear resistance around these levels. Maybe it's good for a short-term trade. I wouldn't be looking at it right now because until it clears at least that $17 level. Basically, if you wanted to get in, maybe the opportune time would have been back here in September 2024. But really, would you have taken this entry? Look at this bearish sentiment that we've seen back there. And the fact that it broke
But if the backtested rules all lined up, and it matched and you've got that strong level there and it closed up strongly that week, then that would have been a reason to get in. And I think this is where the issue comes up, is that people who might not have understood that, you need to be testing and understanding the best way to trade these particular stocks or any stock. And without that, then you're really guessing and you might be missing out on some of the best times to buy or not seeing, you might see a resistance level there, but you might not see the strongest one. And that can be another place where people fall down.
Yeah, and I mean, just looking at that chart real quick, obviously you guys mentioned one entry, but I can see 3 or 4.
Yeah,
just in that whole run up, even one quite recently. So there you have it, Nick. Obviously the team like the stock, but potentially a little late. Next up anyway is Francesca, who writes, I have Karoon Energy on my watch list. The weekly chart looks strong, especially after a strong start to the week. Now going on the weekly chart, I'd feel confident buying now. The monthly chart looks okay, but I feel like I'd want to wait until the end of the month for it to strongly close above, strongly above $1.65. What do you think about the weekly compared to the monthly? And of course, I would put in a stop loss. All right, well that's good. But interesting question, comparing the monthly to the weekly, wanting the monthly time frame, which is the more dominant time frame, to confirm rather than the short-term time frame. To me, that's good thinking, because a lot of the time people are doing anything to try and get in, looking for any opportunity. And a lot of the time on that shorter time frame, you're going to get that opportunity, but without the bigger bias, that can trip you up a lot. Now, she's doing the opposite, waiting for the bigger bias. Is she on the right track?
She's doing everything right. Well done, Francesca. I'm going to tick all the boxes there, and I wouldn't be surprised if you're a student, the way you're thinking about things. So well done there.
I'd say she is, to be honest. But anyway.
Yep, okay, so if we go to the chart now, Pedro's sitting here with a big grin on his face. He can't help it because this was one of your hot stock tips.
It's one of those C moments. So basically, this was our hot stock tip last week, and I quite like it.
Yeah.
But I do like the fact that she's looking at the monthly as well.
Yeah, and I mean, it's quite strong on the monthly at the moment. If we go back to Francesca's lead and what she's talking about, we've had 1, 2, 3 months up and it's looking really good. Sometimes you won't always see a rule that's met on the monthly chart, but the fact that it's got that momentum behind it may be enough if you can find a good level of support and resistance that you found from, combining all of your knowledge to find those strongest levels. You may not need to wait for something else on the monthly chart. I always like to see that momentum rising, so at least you've got that. Tick the boxes. Have you got a nice support level? You probably have. Tick that box, and then that just really gives you a bird's eye view to see whether there's really any resistance that you should be concerned about in the short term overhead. So you'll have all your levels on your chart, I'm sure. And going back to the weekly chart here, so many reasons here to look for the opportunity. you're waiting for a monthly close, you might be right about waiting for the monthly close about that point. But sometimes you can wait for those levels and then you miss out on a run. So you've just got to be prepared for that. Go back to your back testing, but also look at your risk. You know, if you take it now, where can you set the stop? There's a swing there at 10.6. There's a low here at about 17%. You use your 15%. That's what you've got to weigh up. And that, I think, it may be sometimes that people are trading with too big a position, so they can't make a decision. The back testing might be done. There might be something on the monthly chart, something on the weekly chart. Just tick all of those boxes, weigh up the pros and the cons, and then check your risk. And if all of those boxes tick, then it's obviously, it's a go. And you've really got to decide what that process is going to be before you decide to take a trade on a stock so that you're not second guessing it.
Yeah, and there's nothing to say just because it is moving up right now that you won't get that opportunity in a couple of months. Time will tell anyway, but remember to send your questions to info@wealthwithin.com.au and we will answer them in next week's show. Now, next up, we have Natasha who writes, "Thanks for a fabulous show. I look forward to tuning in each week. I am looking at Lovisa, which is coming back to a strong upwards momentum line. Now, the last couple of times it has come back to this line after a fall of around 40%, it has risen 100%. Looking for a medium-term entry if it breaks through the current downtrend line on a weekly chart. Is there anything I need to be wary of?" Now, I can guarantee this is a student with that kind of question.
Can I just ask you a question?
Yeah.
Can you ask Pedro to do the same face that he did just when he saw this stock a moment ago?
All right, put the camera on Pedro's face, please, and let's see. Mate, that sounds like you're.
This is the spot right here. Now,
you like the stock?
I like it, and I mean, I love how it's just so repeatable and so predictable. Exactly how she's outlined the fact that it comes back to these previous support levels, 46%, 36%. Now it's recently done. How much? 38%. It's in that ballpark for that retracement. Plus, it's respected this long-term trend line that it's been in place since 2020. I mean, come on, how more perfect do you want to be, right?
Well, I think she also mentioned, if it breaks through a trend line on the flip side, then would be looking at a potential, interaction with the stock.
Potential entry, right? So, we're on the weekly chart now. So, the entry would probably be on the breakout of that downward momentum there. Yeah. So, I like that you've got a clear level as well to enter with, and you don't often get that in stocks. They might look a little bit more messy. Yeah. Like you mentioned earlier, that outside bar that kind of threw everything into kilter, out of kilter.
Good point.
So, this actually has some very repeatable type of patterns and a clear line in the sand. Now, in terms of levels, I would say that it is coming to some support here. That's going to be a very strong support level around that $23. It has acted as a level of resistance back in 2021 and 2023. A lot of price action back around 2023, around that area. And it's been an actual springboard for a up move in 2024. So it's ticking a lot of boxes for me. I actually do quite like it. Maybe not quite there yet, but when it does, I'll be making that face again, that's for sure.
All right, well, hopefully not on this show. But anyway, Nick now writes, "Can you give an update on EOS? Tested the low and broken a trend line. Pulled back to key levels of support, and now I expect it to rise towards $2. Looking forward to your thoughts." All right, Janine, you can have a go at this one.
Right, it's just above my $1 level. That's why you picked it, isn't it? Yeah, you put me right on the spot there. Now, EOS, it was at SOS. It's had a lot of challenges over time. I hope the CEO doesn't hear me say that one.
Yeah, I think the jokes have a lot of challenges.
We can see, though, that the positive thing right now is the fact that it's finding support, and that's huge. What I love about these type of stocks is even though there are some small stocks that are hard to trade because they're all over the place, and you look at this and you think it's quite volatile, but when you see these sort of pennant patterns coming in, it makes it so much easier, and you even got a little retest of it, and it went up right before those 6 or 7 weeks, and if you know that stuff, then you can just jump in on these things. So looking at what's happening, we've got a bigger one unfolding right now, a bit of consolidation at the bottom. The low here's come in. We need to see this high taken out, but even still, it wouldn't be a done deal for me, because you've got a sort of a pattern unfolding at the bottom there, and it really needs to break out of that properly to be really, knowing that it's not going to just come back and bounce inside that again. So decide what your rule is going to be, but I think there's a good opportunity here on this electro-optic system, specifically from the long-term perspective, where it could go is huge. It's just about timing the entry right. You could decide, well, I'll just wait until it gets above that high there and just take it from there, or you could look at a shorter-term view, considering the upside potential significant, and then say, well, okay, there's plenty of room in there for me to just sort of play around with where I'm going to get the entry when it breaks out.
Yeah, and these kinds of stocks on the weekly, I mean, if you miss one, I think you're probably going to get way more.
Plenty of opportunities,
going through. Great points there from both of you. Thank you very much. Now, if you want to watch more hot stock picks from us, check out our video on the top 10 stocks to rebound after the market crash, and remember to subscribe.